Hey, what's up everybody? Welcome to the Crypto Sandwich channel, where we talk about all things crypto, and I'm a ham sandwich. We did it! We made it to episode number 2, and boy am I glad to get this one out. As always, we'll be covering crypto news and technical analysis, as well as taking a look at traditional markets that affect the crypto space. A free way to support the sandwich is by liking the video, commenting down below, and subscribing to the channel. Today is Thursday, March 3rd, 2022. We have a lot to cover, so let's get into it. Catching up in this week or so in crypto, here's what's been happening. The world continues down its ominous path as geopolitical tensions worsen. People around the world are becoming unbanked by military conflict or by overzealous governments, resulting in bank runs and blocked access to personal finances. It's unfortunate times like these that the power of decentralized finance really shines. One of the things that drew me into the crypto space was the potential for solutions to so many of today's problems. I believe most of the issues we face in the world can be solved by trustless, verifiable, decentralized solutions. Let's dive into some news tabs and see if we can find a glimmer of hope. First up in adoption news. Mexican senator to propose crypto law. We need Bitcoin as legal tender. Amid El Salvador reporting on cases of the positive impact of the country's Bitcoin adoption, Indira Kempis, a government official in Mexico, has once again urged that the country should follow El Salvador's example on Bitcoin. It is clear to me that financial exclusion is one of the public problems that few of us have addressed with feasible alternatives, and that this type of technology is allowing us to generate an alternative so that millions of people can be included in the financial system, Kempis said. The senator went on to say that Bitcoin adoption is a historic opportunity for countries around the world to address issues like inequality and achieve financial inclusion. The latest news comes amid the cryptocurrency industry's growing momentum in Mexico recently, with major global crypto exchange Coinbase launching instant crypto withdrawals into Mexican pesos last week. A bill has a long way to go to become a law or legal status, but still, the domino has been tipped. Bullish. Let's go Mexico. Next up, El Salvador's tourism rises 30% after Bitcoin became legal tender. According to the country's Ministry of Tourism, cryptocurrency multiplies the opportunities to do business with more partners anywhere in the world, the Salvadorian government explained. The tourism minister continued, expectations of recovery in this sector have been exceeded since 1.1 million visitors had been projected, and 1.4 million have been received. Minister Valdez noted that 60% of the visitors to El Salvador came from the U.S. Adopting Bitcoin as legal tender has also boosted the country's GDP growth, according to El Salvador's president, Nayib Bukele. El Salvador's GDP grew 10.3% in 2021. El Salvador never had a double-digit GDP growth before that. Not long ago, the International Monetary Fund, the IMF, practically begged El Salvador to turn away from Bitcoin forever and reject cryptocurrency. In response, President Nayib Bukele mocked the organization on Twitter and reaffirmed the nation's stance, saying that El Salvador would be an independent, sovereign nation that could sort out its own financial initiatives. Bold and bullish. It's wild to see not just individuals but also nations thriving when they adopt Bitcoin and crypto into their investing model. Let's move on. The NFT Swindler. There's an air of panic in cryptoland after hundreds of NFTs appear to go missing from the OpenSea platform last Saturday. OpenSea had to launch an investigation after an estimated $1.7 million in NFTs went missing from some of its users' accounts. The platform said it was a phishing attack and nothing to do with the OpenSea website itself. The details aren't completely clear yet, but apparently a hacker sent false emails to 32 or more users asking them to sign a false contract that was actually a half-empty document that transferred over NFT ownership to the hacker. But Twitter isn't so sure it believes them, with rumors starting to swirl that in fact, $200 million in NFTs had been stolen, but OpenSea co-founder and CEO Devin Finzer vehemently denies the gossip. There are no shortages of scammers, traps, and ways to become vulnerable in the crypto space. You have to do your own research and be diligent at online security practices. Set strong passwords and use 2FA where you can. It definitely hurts adoption when these types of occurrences take place. Next up, privacy comes at a price. The Monero community is getting worked up over security on the blockchain as one mining pool comes close to network dominance. One mining pool is coming close to holding domination over the Monero network. MineXRM is the biggest Monero mining pool, and the amount of hash rate produced by the pool is approaching 44%, up from 34% in August last year and scarily close to the 51% mark. Controlling that much of the network's hash rate is a security risk to the rest of the blockchain because it means the pool could technically carry out a 51% attack, stopping the network from authorizing new transactions and causing all sorts of chaos from double spends to denial of service. This is not a good look for the privacy-oriented cryptocurrency. A distributed hash rate among miners is key for network security in a decentralized blockchain. But like we've seen with Bitcoin and other cryptocurrencies in the past, hash rate dominance by miners can change drastically over time. Next up in regulation news. The US charges Indian citizen in $3.4 billion crypto Ponzi scheme Bitconnect. If convicted of all counts, the founder faces a maximum total penalty of 70 years in prison, said the U.S. Department of Justice. The DOJ announced Friday that the founder of the global crypto fraud scheme Bitconnect has been charged. Satish Kumbhani was charged with conspiracy to commit wire fraud, conspiracy to commit price manipulation, operating an unlicensed money transmitter, and conspiracy to launder funds internationally for orchestrating a global Ponzi scheme, according to a DOJ press release, which alleged he traded cryptocurrencies using his investors' funds and repaid earlier investors with the funds he received from the later investors. The 36-year-old from Hamal, India, misled investors that the scheme's lending program was able to generate substantial profits and guaranteed returns using Bitconnect trading bot and volatility software, the Department of Justice detailed. However, the DOJ noted, in total, Kumbhani and his co-conspirators obtained approximately $2.4 billion from investors. Well, this has been an ongoing saga. For those that weren't around the crypto space in 2017, Bitconnect was the most blatant Ponzi, and I'm pretty sure the BCC token held a place in the top 5 cryptocurrencies on CoinMarketCap.com. Top 10 for sure. Maybe those poor souls that signed up under Trayvon James will one day again be reunited with their Bitcoin. Here's to hoping.
What am I gonna do?
Next up in market news. Looking at the S&P 500, just 45% of stocks are above their 200-day moving average. The bottom chart shows the S&P since 2008. The chart on top tracks the percentage of stocks above their 200-day moving average for stocks that make up the S&P 500. In April of 2021, 96% of the S&P stocks traded above their 200-day moving average. Currently, just about 45% remain above the 200-day MA. In the past, the 40 to 50% range was an area to pivot from on a correction. Other years, this represented a staging area for the smart money to reposition and watch the market move lower. A similar 20% correction to the other years has the S&P measured down to the 3840 area. A major break with 70% or more stocks trading below their 200-day moving average could see a more serious 35 to 50% correction. This is a pretty sobering read, as generally in traditional markets, when an asset is trading below its 200-day moving average, it's considered to be in a bear market. Ideally, you want price to be flirting with a 21-period moving average. Moving on. And in lighter news, TradingView user LuxElgo has created a crypto meme-inspired McDonald's pattern indicator. The indicator fits a cubic Bezier curve using tops and bottoms in order to approximate a pattern, which is described by an M shape with deep retracements greater than 50% forming a McDonald's logo. If you're not familiar with the crypto McDonald's meme, it's basically that when Bitcoin and the crypto markets crash and our trading and Lambo dreams are shattered, McDonald's will be there as a backup career. And in good humor, both Michael Saylor and Nayib Bukele have both embraced the meme. Hey everyone, hope you're enjoying the content so far. I'd like to take a quick minute to share a couple ways you can help the channel by using the affiliate links for some products that I use and recommend. First up is Ledger, popular for their Nano line of hardware wallets. Hardware wallets are a necessity for crypto protection. If you do not control your private keys, you do not own your crypto assets. Next up is Trezor, popular for their Trezor 1 and Model T hardware wallets. Manage your entire digital identity, coins, keys, or passwords, all on one device, owned and controlled by you. If you're in the market for a hardware wallet, please consider using an affiliate link on screen or down in the video description below. Remember, not your keys, not your coins. Thanks for supporting the channel. Let's get back to it. The last week has been a bit of a roller coaster in the cryptocurrency space as prices have made an incredible recovery from the recent grind down. As we can see at the time of recording on Coin360 that the current market is fairly neutral as the prices of Bitcoin, Ethereum, and the general market are making small percentage moves down after such a significant move up. Taking a look at the Fear and Greed Index, we are currently sitting at 52, suggesting the market is neither bullish or bearish, marking a point of indecision as price hovers around significant levels. Let's take a closer look and get into some charts. Before we get into the charts, I thought I'd share a little nerd tip I learned recently. If you use TradingView and want to streamline your workflow, you can add in section divisions and label them to clean up your watch lists. I'll add a few to segment off this watch list here. So we'll add crypto, click anywhere in here, add section, double click here, crypto, hit enter. We'll add a commodities, we'll add one for Forex, we'll add traditional markets, and we'll add bonds. Right click, add section, double click, paste, and hit enter. There we go, nice and visually organized. If you have any trading or TradingView tips you'd like to share, feel free to do so down in the comments. Alright, let's dive into some charts. Looking at the Bitcoin dominance chart on the weekly time frame, as we can see here, the Bitcoin dominance smashed through the top resistance in the descending triangle it was in, making a 3.5% gain up to 44% where it currently resides. From here we can speculate that either the dominance tests the resistance flipped to support and then continues up to battle the 48% area, and then the 58% levels. If we take a measured move off this triangle, we could see dominance spike to the 53% area. Or we could reject and enter back into this descending triangle, but that seems the less likely outcome with this recent bullish spike in price action. Now let's take a look at Bitcoin. Bitcoin over the last week has made an incredible recovery from its low of $34,300 to where it currently sits now at just under $43,500. On February 28th, Bitcoin on the daily chart printed from wick to wick an almost $7,000 candle from $37,500 to $44,200. That's 18% price action in one day. So bullish. But we still have a lot of significant price levels of resistance overhead before we can even think of battling the all-time high of $69K. First being the $53,000 area, and then the $59,000 area. If we beat those levels, Bitcoin could test the $72,000 price level at the top of this triangle, a small pit stop before the moon. But if things go south, I think we can find decent support around the $38,000 area at the bottom of this giant ascending triangle. Until then, we'll just have to see how it goes and play it level by level. That's it for this episode of Crypto Sandwich. Hope you got something out of it. Let me know in the comments below what you thought. Let me know if you'd like to see me cover something I didn't. And don't forget to like and subscribe, as it does help the channel and the algorithm. And last but not least, a special shout out to my 3 YouTube subscribers and 2 Twitter followers. If it wasn't for you, I'd just be talking to myself. Until next time, I hope you have a great time. Keep your head up and keep your bread up. Disclaimer. The Crypto Sandwich channel is for entertainment and information purposes only. Nothing on this channel is financial advice, nor is it meant to be a recommendation to buy or sell any financial instrument. I'm not a financial advisor, I'm a sandwich. If you take financial advice from a ham sandwich, you're out of your bread box. Always do your own research.